Bitcoin's at $81,255, up 0.4% in the last 24 hours, but the bigger picture remains a sideways grind. Price action over the last 90 days shows no clear trend. We're chopping between major support and resistance. Today's range was tight, from about $80,500 to $81,700, and volume is well below average, so the move lacks conviction. On the daily, MACD is still above its signal line and the histogram is positive. That's bullish momentum, but it's not accelerating. The candles show a sideways structure with no clear higher highs or higher lows, so short-term traders should watch for a potential histogram rollover. Zooming out to the weekly, MACD is also above the signal line and histogram is positive, so the broader momentum supports the daily view. However, the weekly candle closed below the 50-week moving average, which keeps a cautious tone. The weekly structure is sideways, so neither timeframe is giving a strong directional bias. On the monthly chart, the regression fit channel is clearly descending. Both the resistance and support slopes are negative. Price is currently in the middle of this channel. A break above the top rail would flip the macro thesis bullish. But as long as we're inside this downtrend channel, the long-term bias remains bearish. On the daily chart, RSI at 54 is right in neutral territory. No overbought or oversold pressure. The stochastic oscillator shows short-term momentum turning up. The fast line just crossed above the slow line, but it's already in the overbought zone. That can happen in strong trends, but here it suggests the bounce might be losing steam soon. Nearest resistance is the recent high around $126,000, very far. In practice, the 38.2% Fibonacci at $85,400 is the first real overhead zone. Support is the 23.6% Fib at $75,790, and then the recent low at $60,256. The big story, Strategy, formerly MicroStrategy, is considering selling some BTC to fund dividend obligations. MSTR fell 4% after hours. That's a potential supply overhang. On the flip side, short liquidations and ETF inflows pushed BTC above $81K. The Fear and Greed Index just turned neutral for the first time since January. With CPI at 0.9%, the Fed remains on hold, and recent FOMC dissents signal no rate cut soon. CoinDesk reports that Strategy's Michael Saylor is signaling a potential Bitcoin sale to cover $1.50 billion in annual dividend obligations. MSTR dropped 4% after hours, and BTC briefly dipped below $81K. This overhang could cap upside until clarity emerges. The latest BLS numbers show CPI at up 0.9%, unemployment at 4.3%, and payrolls up 178,000. These keep the Fed on hold. No immediate trigger for crypto, but a stable macro backdrop supports risk assets at current levels. CoinTelegraph highlights that short liquidations and rising open interest could be pushing BTC toward $90K. But with volume drying up, the conviction behind that move is questionable. Bulls need to see follow-through. Polymarket gives only a 30% chance that MicroStrategy sells any Bitcoin by June 30th. So the market isn't fully pricing in a sale. Meanwhile, there's a 100% chance BTC stays above $76K today, reflecting the current price stability. These odds suggest traders are cautiously optimistic but not complacent. Overall, we're in a neutral zone with elevated volatility. Volume is low, MACD is positive but flat, and sentiment is neutral. Watch $85,400 as the first real hurdle. A break above that could accelerate. For tomorrow, expect continued sideways action unless the strategy news sparks a move. Bitcoin and Ethereum are flat. Solana is up nearly 3%, and Dogecoin leads with a 3.6% gain. Tron and BNB are also in the green. Overall, altcoins are seeing mild bid, but nothing explosive. This is not financial advice. All analysis is for educational purposes only. Data and news sourced from CoinDesk, CoinTelegraph, Decrypt, and the BLS. Full URLs are in the description. That's all for today. Stay sharp, and I'll see you tomorrow for another daily check-in.